You are not investing in crypto. You are buying the feeling of being right and calling it a strategy. That sentence feels uncomfortable because it attacks something personal. Not your portfolio, but your identity as an investor. In crypto communities, the most attractive idea is not profit. It's justification. The belief that holding through uncertainty must eventually be rewarded. The narrative is simple. Do not sell. Do not doubt. Let time prove you right. Income enters this story as a sedative, a way to stay inactive while still feeling productive. Earning without selling sounds like intelligence disguised as patience. But finance has never rewarded patience. It rewards exposure. Every dollar earned exists because someone else needed liquidity, capital, or risk transferred onto you. There is no moral balance sheet. Markets do not care how long you waited. The moment income appears, the position changes. Holding stops being passive. Risk stops being theoretical. The myth survives because it feels fair, because it feels earned, and because it delays the hardest decision of all, admitting uncertainty. The maze begins with a choice that does not look like a choice. The first path is liquidity. You deposit assets into a pool. Traders swap. Fees appear. It feels neutral, mechanical, almost invisible. Your assets do not leave the ecosystem. Nothing dramatic happens. The second path is convenience. Centralized yield. One deposit, one number, growing quietly. No charts. No monitoring. No effort. Just trust. The third path flatters intelligence. Wrapping assets. Bridging chains. Entering DeFi elsewhere. More steps. More screens. Higher numbers. Each path promises the same thing. Progress without exit. Each path whispers that selling is unnecessary, even irresponsible. What none of them say clearly is what you are actually offering in return. Liquidity, custody, or trust in systems you do not control. The deeper you go, the more normal it feels. And the harder it becomes to admit you entered the maze voluntarily. Every income strategy hides its price behind motion. Liquidity provision reshapes your position slowly, constantly, quietly. Your assets rebalance against volatility. Fees accumulate while exposure mutates. You may earn income and still end with fewer coins than you started with. Impermanent loss is not a bug. It is the cost of participation. Centralized yield is simpler, but the price is immediate. Control. Your keys are replaced by promises. Access becomes conditional. It works until it does not. And when it stops working, explanations replace withdrawals. Wrapped assets multiply opportunity and fragility at the same time. Every wrapper adds dependencies. Bridges. Contracts, operators, assumptions. One failure is enough. Across every path, the payment is the same. You surrender certainty. Income exists because safety was removed. You are not being paid for holding. You are being paid for letting go. And the longer you stay inside the system, the harder it becomes to leave without loss or regret. The marketing image of income is clean. Screenshots show smooth curves. Percentages look stable. Time frames are selective. What you do not see are the pauses, the drawdowns. The nights spent watching volatility erase weeks of progress. Real returns are modest, often low single digits, sometimes less than inflation. High yields demand high attention. Low yields demand patience that rarely pays for itself. Fees fluctuate. Volume dries up. Platforms adjust terms without warning. What looked passive becomes active monitoring disguised as calm. The psychological shift happens quietly. Income stops being a tool and becomes proof. Proof that holding was right. Proof that doubt was unnecessary. Defending the strategy becomes more important than evaluating it. At that point, the asset no longer matters. The narrative does. Many investors lose flexibility here. They miss exits. They hesitate. They confuse complexity with safety and activity with progress. The cost is rarely catastrophic. It is gradual, and that makes it dangerous. Here is the verdict most people avoid. Yes, crypto can generate income without selling. It is also fragile, conditional, and often not worth the trade. These strategies are not foundations. They are experiments. Small, controlled, reversible. The moment income becomes the reason for holding, the original thesis disappears. Conviction is replaced by maintenance. Belief is replaced by obligation. Real strength in crypto does not come from squeezing yield out of every position. It comes from understanding exposure, liquidity, and downside before chasing upside. Markets do not punish optimism. They punish confusion. Income is not a reward for patience. It is a decision to accept risk in disguise. Make that decision consciously. Because if you do not choose the cost, the market will choose it for you.